What's up, guys? Okay, so today we're going to do a quick video on testing out this day trading strategy, which is the 9 EMA and VWAP. So I came across this when I was doing my research and came across a trader who likes to use this, and now I just want to test out the strategy and make sure that it actually applies and it does give traders an edge. So let's dive into it. So what it is it's 9 EMA and VWAP, which is the volume weighted average price. If you look at any if you look at the daily chart here, so you're looking at first looking at the SPY and how we do. So quick disclosure: on Friday there was a big bull market run. So situationally, you gotta take this with a grain of salt, just because what worked that day may not work on other days. So for example, what works in a bullish run day may not work on a bearish day, or what works on a bearish day may not work on a choppy day. So these are some of the nuances that you gotta keep in mind as you test out other trading strategy. So now with that said, let's dive into this exponential moving average 9 and volume weighted average prices, or VWAP. So the idea is when it crosses over it's two lines, and when it crosses over, it presents traders an edge of where they can enter the trades. So for example, if you look at, so first this is a daily time frame. If you go into the 5-minute time frame, you can see the orange is the VWAP there, the volume weighted average price, and then the green is the 9 EMA. So at the open, it looks like SPY was moving up. Again, this is at the open, by the way. It's 4 p.m. was last day's close, or yesterday's close, and then today it opened. First it gapped up, which, it all signs point to bullish, but then the next 5 minutes it shut down. And shut down even more. And this happens rather often nowadays, and I say nowadays because this is, at the end of 2022 and beginning of 2023, market has been kind of traded just in a range here, between 373 and essentially like about 390. So they've been trading in a range, and it's been kind of more choppy than whatnot. So you can see all these things. There's no clear direction on which way it'll go. For example, in the past, September 2022 to October 2022, it's kind of closer that it's trending down and trending down. But this one, when it's trading within a range, it's a little choppier and it's a little harder to navigate. So the one day that we had a bull run was Friday, which was, as you can see, it was a move of a 2.29%. So let's look at the market again. Let's look at the 5-minute time frame. So the first few minutes, traders might get faked out if they entered very early instead of wait and watch and kind of see where the market direction is going to take you. A little pullback that happened past the low of day, or at least the first 5 minutes low of day. And then finally here there was a indecisive candle, they call this a hammer, which usually serves as a almost like a volatility contraction before it starts moving big one way or the other. But anyway, so it starts then moving up, but then the strategy here is the 9 EMA and VWAP. The 9 EMA represented in the green line and VWAP represented in the orange line. This crosses over right about here in the 10:20 a.m. Pacific time, 10:20 a.m. Pacific time, or about 10:15. This is like where it crosses over. So if you're a trader that believes in this strategy, this candle likely will be the range that you enter in. And then you can set your, for risk management perspective, you can set your stop loss likely at the low of day, which would be around here, which would be at 379.45. So your entry would be somewhere around here, 383.94. Again, where this crosses over, where the 9 EMA and the VWAP crosses over. And then from there, now that we have essentially the results, it looks to be moving nicely up. So on a nice bullish day, the trade just the market or the SPY. 9 EMA and VWAP of this one chart, it represents a pretty good entry, right? So this is again just off of one. Now let's look at the other things. So I sorted by 9 million here. Essentially, it's a 9 million volume. So I'll show you the formula. The volume is about 8.9 million. So this then sorts out to any stock that has 9 million volume or above on Friday, which makes it very liquid. You can, as a trader, you like liquid stuff, so you can get your orders filled, get in, get out, if it falls under your strategy, and then you can profit from there. Just because there's always traders on the other side who will buy from you or who will sell to you. Essentially, this is a liquid stock with a lot of eyeballs on it. In the price history of 5, it's essentially a price above 5, because anything below 5, like if we're trading at $1, $2, $3, somebody who is not a retail trader, or I should say somebody with just bigger capital, can manipulate this stock, and that's when pump and dump happens. This is why, those penny stocks, even like crypto of like those 20 cents, 10 cents, every single one of them is bound for a little rug pull or pump and dump. So I keep it at above $5 here, just to kind of avoid that and kind of see where, see if there's any stocks that can move it, or safer, I should say. So not only is it liquid, it's also a little bit safer, so we're not bound for a pump and dump. So once that happens, we go up, and we sort that by the biggest mover. So Tesla was the big mover. Let's look at the Tesla. Let's look at the first few charts here. We go into the 5-minute time frame here, and so Tesla yesterday closes at about 110. Then it gapped down. A lot of selling happened overnight or pre-market. It opened essentially at about $103 level, which was insane. And next 10 minutes, or next 5 minutes, move lower before it moves back up. So this doesn't really apply just because nothing ever crops here as far as a 9 EMA and VWAP goes. So if you're a follower of the strategy, this likely didn't really apply to you. Let's look at the next one, Boeing. Boeing is a beautiful chart. Obviously, again, at the open here, yesterday open at the open, just closed 4 p.m. It closed at near the high. Open very strong, continuation of yesterday. But then it got, a little pullback over here, and pull back down lower than the open. But then if you look at the 9 EMA and the VWAP here, it crosses over here, which actually is beautiful just because it crosses over again at the tight candle, which is a volatility contraction. Usually that is it predicates any big move. So any tight candle or anything like that, it predicates a big move, whether it's upside or downside. And then in this case, it crossed over VWAP going up higher, 9 EMA going up higher than the VWAP. So it's an indicator of potentially moving higher. So again, if you enter here at 207.32, this likely would have been a phenomenal trade just because it never touched that level again. If you enter here, set your stop loss to the low of the day, and it never touched your stop loss, or it never touched where you entered again for the rest of the day, because it then made a move of 2.75%. So that's pretty sweet deal. So again, off of SPY, off of BA, this looks to be a good strategy so far. And then let's do one more on the bullish side. Let's look at that SPY with the QQQ. Well, we didn't look at QQQ, but it looks like again QQQ right at the cross here. Moved up to the upside, which is nice. Qualcomm cross here. And again, this moved up to the upside. And again, bullish day. This is definitely a favorable setup for a nice clear bullish day. Let's look at stocks that aren't moving so well that day. And I'm sorting it just now by low to high, essentially like anything that moves in a different direction. HKD. So you can kind of see here, yesterday it closed at a tight candle. Today it moved up. But you can kind of see what's crazy about this is 9 EMA was above the VWAP before, but then the cross happened essentially at the open where 9 EMA then goes lower than VWAP. So 9 EMA previously on the bullish run, 9 EMA goes above the VWAP and crosses. Now this crosses over to the downside below VWAP. And you can kind of see during the crossover, this is at essentially the first 10 minutes of the open. It moved up a little more here, but then if you enter here and you kind of have, you gave it a little room, the VWAP, or sorry, the 9 EMA and VWAP, then essentially it was an indicator of it moving down. So it looks like it works on the upside and the downside if you want to look for an entry point. And again, SOX S, which is a semiconductor bear, this moves in negative correlation to the bull, just because this is a bear stock. But you can go long this, say you're bearish the market, instead of shorting some kind of stock, which is safer essentially, but we'll get to it another time. So it looks like this crosses over, and again, the 9 EMA represented by the green line, because it crossed over here at the tight candle. If you enter there, then this essentially moves down to the downside, moves to the amount, which is 9.98%. And this looks to be a good strategy, just off of looking at, again, the small amount of data that we have here. But anyway, again, this is the crossover here, and then up to the downside. So, with that said, this actually is a pretty phenomenal strategy when it comes to a clear day of direction, whether it's bullish or bearish. It looks like, I'd imagine bearish, 9 EMA will just, shoot down below the VWAP, and then the move will start, then the stock will start going down. Now, take it with a grain of salt, just because choppy days this likely will not work. I'd imagine choppy days will go below, but then it'll jump back up. Go below the VWAP, it'll jump back up, which makes it tougher for traders. So if you're just like any sailor, think of it like if you're a skilled sailor, you may be able to navigate during the days that are raining and storming and equivalent with a choppy day in the market. And it's, if you're a skilled sailor, you've been there for years and years and years, you may be able to navigate. But on the other side, some skilled sailors will probably just say, no, let's sit this one out, because it seems that, the market or the weather is carrying a lot more risk than we'd like it. So let's sit this one out. Anyway, if you think of it like that, then obviously you would make a decision based on that, based on your risk management, and probably just sit out altogether. But anyway, that's the 9 EMA and the VWAP off of a small chart. I encourage you to get TC2000 just because it has the ability to let you go back and deep dive and test the strategy. And again, the software is just phenomenal. This is what I use, and for any scanning, and then on my trades, I do it on my brokerage, which is Fidelity. Thank you for watching.